missed us on this important occasion. I thank BSE for inviting me to speak at this function. As the oldest stock exchange in Asia, the origins of BSE can be traced back to the 1850s. We all have heard anecdotes of how sharebrokers gathered under a banyan tree in front of the town hall in Bombay, now Mumbai, to carry out informal share and stock transactions. We are grateful to visionaries who in 1875 had the foresight to institutionalize these informal gatherings into the Native Share and Stock Brokers Association, which later acquired permanent recognition as a Bombay Stock Exchange. Indeed, these informal gatherings under a banyan tree, the foundation and the building blocks of the edifice of the Indian securities market. The journey of BSE from humble beginning under a banyan tree to its status today as a globally reputed institution has in many ways mirrored the journey of our nation from its pre-independence era to our status today as one of the fastest growing emerging market economies in the world. BSE in its 150 years of history has witnessed 2 world wars, the Great Depression, independence of our country, and the progression of our economy over the years, especially the rapid growth of securities market in the last few years. Very few institutions have witnessed so many events in their existence, and even fewer institutions have played such a crucial role in nation building. With all ups and downs, BSE has continued to move forward and remains as one of the key market infrastructure institutions, or the MIIs as we call them, that are operating as public utility institutions in India. Let me just give a small glimpse of state of securities market in India today. Sustained capital formation is indispensable to our collective aspiration of Viksit Bharat. We need safe and efficient capital markets where informed investors and credible issuers come together under an optimally regulated ecosystem. While we must never grow complacent, all stakeholders in our capital markets can take pride in the remarkable journey we have traversed. Over the years, India's capital market infrastructure has set global benchmarks for safety, transparency, and efficiency. From pioneering dematerialized holdings and early adoption of online trading to implementing cutting-edge trading, settlement, and risk management systems, our markets have stayed ahead of the curve. Notably, India led the way with T+1 settlement cycle and built robust mechanisms for resilience and redundancy. Even in the most challenging times, such as the onset of COVID-19, when some major global markets faltered, we did not shut down trading for a single day. Today, our ecosystem routinely handles about 2,000 crore orders and transactions daily, one of the highest volumes in the world. In just 5 years, the number of unique mutual fund investors has grown from 2 crore to 5.4 crore, and the number of unique Demat accounts has climbed from 3.2 crores to 11.4 crore. During FY 24-25 alone, investors channeled a record 6.1 lakh crore into equity-linked mutual fund schemes, while issuers raised a record 4.6 lakh crore through IPOs, FPOs, QIPs, rights issues, and OFS. Over the past 5 fiscal years, FPIs have net brought in over $58 billion of investments into our equity and debt markets, As of March 31, 2025, FPIs held 66.8 lakh crore investments in India, or over US dollars 780 billion worth of India equity investments. Let me come to the role of MIIs. BSE is an important MII, as you know, as an exchange. And MIIs acting as first-level regulators have been instrumental in ensuring that SEBI meets its triple mandate of investor protection, development, and regulation of securities market. We have encouraged healthy competition between MIIs as it increases operational efficiency, encourages innovation, leads to better investor experience, and provides for natural backups. Considering the rapid progress being made in areas such as artificial intelligence and quantum computing, securities market will also undergo a change. We need to be prepared both for the opportunity these technologies offer as well as the risks that may arise. Even as MIIs innovate, they must ensure that investor protection and overall trust in the system remain their topmost priorities. This includes expanding investor education and awareness, enhancing cyber resilience, maintaining robust risk buffers, swiftly detecting and punishing fraudulent behavior, and upholding the highest standards of disclosure and governance. Short-term or narrow commercial goals should never overshadow these foundational public interest objectives. By preserving trust, we will continue to attract both domestic and global investors, driving sustained capital formation. I would now just come to SEBI's stance on optimum regulation and investor education. In a dynamic securities market, the role of regulator is not only to ensure market integrity and promote trust, but also development of market. We must therefore move forward with optimum regulation approach, which is mindful of the cost of compliance while exploring alternatives to achieve our objectives. Rapid changes may also create regulatory uncertainties on top of several global headwinds that industry faces today. Towards this end, we will be looking to review our existing regulations, weed out those which are outdated, and rationalize those which may be necessary. We will intensify our consultations with stakeholders in this regard to prepare a pragmatic roadmap for our objectives of simplified yet effective regulations. Moreover, under the auspices of FSDC, chaired by Honorable Finance Minister, we have a robust institutional mechanism for financial regulators to come together for harmonization of policies and regulations, ease of doing business, and reducing the cost of compliance. In a rapidly growing securities market, it is also imperative to further accelerate SEBI ecosystem's ongoing efforts for investor education and awareness, including on cyber frauds and fraudulent investment advice. We will intensify these efforts in a comprehensive manner. I once again congratulate BSE on achieving a historical milestone and hope that BSE will continue to serve the people of the country in achieving our goal of Viksit Bharat. Thank you and Jai Hind.
Thank you, Chairman Shri Pandey for your enlightening words. And here is all of us looking up to your leadership as you guide India's capital markets into a new era. It is now my privilege, ladies and gentlemen, to invite our next guest of honor, the Honorable Minister of State Finance, Shri Pankaj Chaudhary, to address us.
और पूंजी का दोहन करने की सहूलियत प्रदान की है। भारत स्वतंत्रता के 100वें वर्ष तक एक विकसित राष्ट्र बनने की दिशा में कदम बढ़ा रहा है। एजेंडा महत्वपूर्ण है, महत्वाकांक्षी है। पूंजी बाजारों का अर्थव्यवस्था पर कंपाउंडिंग इफेक्ट पड़ता है और इस महत्वाकांक्षा को सक्षम करने के लिए स्थिर, लचीला और स्थायी लाभप्रदता प्राप्त करने की आवश्यकता होगी। ऐसा करने के लिए हमें अपने पूंजी बाजारों को और भी मजबूत करना होगा। आज हम BSE के 150वें वर्ष पूरा होने का उत्सव मना रहे हैं। हम न केवल उन दूरदर्शी लोगों की विरासत का सम्मान कर रहे हैं जिन्होंने इसकी नींव रखी, बल्कि भारत के हर कोने में फिनटेक, इनोवेशन, अधिक वित्तीय समावेशन और निवेश की गहन संस्कृति से प्रेरित अनंत संभावनाओं के भविष्य की ओर भी देख रहे हैं। हम सबका भविष्य देश के भविष्य के साथ जुटा हुआ है और भविष्य हमारा उज्जवल भी है। एक बार पुनः मैं BSE को 150 वर्ष पूरे होने पर बहुत बहुत बधाई एवं शुभकामनाएं देता हूं। सभी सम्मानित अतिथियों को बहुत बहुत हार्दिक बधाई देता हूं। धन्यवाद।
Ladies and gentlemen, truly making this occasion special is the august presence of our chief guest. On behalf of everyone in the room, it is the Bombay Stock Exchange's absolute privilege and honor that ma'am has graciously agreed to address us on this special occasion and considered us worthy. I call upon to this podium the Honorable Minister of Finance and Corporate Affairs, Shrimati Nirmala Sitharaman ji. Let me first thank Shri Sundararaman Ramamurthy for choosing to have me here. My first formal occasion to be in the BSE. My colleague in the Council of Ministers, Dr. Shri Pankaj Chaudhary ji, Chief of SEBI, Tuhin Kanta Pandey ji, and all the stakeholders in the BSE's future, invited guests, and elite of Mumbai's financial domain. I'm indeed very happy to be here, very proud to participate in this 150th celebration, a very steady journey of 150 years that the BSE has had. And let me upfront start with wishing the BSE several 150 years more and a bright future. And it is your service to the nation in terms of holding up the markets and also giving a very influential sentiment to impact the Indian economy, which is going to be looked up to. And therefore, my good wishes that you succeed, prosper, and make an impact on India's wealth creation. It's a great matter of pride. And also, both the speakers before me have mentioned as to how under a banyan tree, the Indian, rich in Indian symbolism, a banyan tree prospers, has several roots, aerial roots as well, provides shadow and shade for the birds and animals, and it is seen as that which grants your wishes. The BSE's growth has been so symbolically associated with that one early visionary group of people sitting and meeting under it, which has brought it to this far into the technology-driven age. But that has a story also, because it is only those informal but yet very effective meetings, bringing together of minds, which have come up with great institutions such as the BSE for India. It didn't require big hallowed areas or portals. A common man's everyday tree has really grown into such a big institution. Is something which is so aligned with the Indian ethos, and therefore I think this augurs well to lead us towards Viksit Bharat as well. I, in fact, congratulate and thank the entire leadership of and the employees of the BSE, all past and present, and to every investor, entrepreneur, and policymaker who has contributed to this incredible, steady journey of the BSE. The historical significance has been narrated both by the chief of SEBI and also my colleague. I need not elaborate on it, but it is worth recalling because it's the 150th year, it's a historic time, and for a stock exchange which has existed before India's independence, made its mark even during that time under the British rule. The imprint of the banyan tree installed outside this venue also resonates that transformation which I referred to a minute ago. I was surprised to hear, and I'm very proud to note, that the BSE has a capacity to process 1,500 crore orders per day and to manage even peaks of 14 lakh orders in a second. That is where a traditional, nearly 150 years as of today, institution, 150-year-old institution, has utilized technology to transform itself so much that the numbers match India's population scale, and for the world, which is advanced, which has seen all the stock market booms and busts, today looks up to the Indian scaling that the BSE has achieved as remarkable. So these are not small numbers. 14 lakh orders per second and 1,500 crores orders per day is not small in number. And I was just sort of looking at further breaking down this number. The average time taken to complete a transaction is less than 200 microseconds. If all this matters for a stock exchange, it is so important that you have stood up to the challenge of technology, and the benefits are accruing to all the shareholders in this stock exchange. And therefore, this is a beautiful journey of the financial sector, and this is all pervasive, and that is why I think it has a story of its own. 150 years is important, but together with it, the kind of milestones that you've achieved are very important. Much like the Wall Street, in the US, Sensex BSE's benchmark index of 30 top companies is the sensitive pulse of the Indian economy, and that is there for everyone to recognize. From its start at around 550 points, that is in 1986, to touching a high of 80,000 points in July 2024, it has mirrored the resilience and the growth potential of the Indian economy itself. So, I think this is a barometer to show where Indian economy is strengthening, where it is moving towards, and therefore, even as we celebrate 150 years, we are celebrating how you mirror the growth potential of the Indian economy. All of us would have been familiar with the acronym VUCA. It is a VUCA word. It's full of volatility, uncertainty, complex and ambiguous paradigms which are shifting every day. One thing stands firm. the strength of the Indian economic fundamentals and the macroeconomic prudence with which the economy is being managed. We offer investors who are the nerve centers of a stock exchange. We offer investors a combination of policy stability, growth, governance and innovation, macroeconomic prudent policies, and democratic institutions and youthful dynamism. We have recognized the shifts which are underway when we presented the budget for 25-26. It had outlined a clear roadmap focusing on key priority areas, including agricultural productivity, rural development, inclusive growth, manufacturing, support to MSME, employment generation, innovation, energy security, and export promotion. We firmly believe that the most effective path to building economic resilience is to foster domestic efficiencies and competitiveness. India is confident much later than the COVID, now after the COVID, because of the calibrated approach that we took. India is confident that we will navigate these global disruptions with policy agility and long-term vision. Our focus remains firmly on building robust domestic foundation, and the foundation is laid and strengthened through infrastructure development, inclusive growth, and deeper regional cooperation. These are not just buffers, external buffers to external shocks, but accelerators for our long-term growth aspirations. And I think the role of the capital markets in India's growth story has never been more important than it is now. Driven by a strong regulatory architecture, and we have the SEBI's chief here. So driven by a regulatory architecture which is strong and enabled by reforms such as dematerialization, T+1, about which the SEBI chief spoke, T+1, the settlement, direct market access, and mutual fund penetration, India has built one of the most robust market infrastructure in the world. For a moment, I'll take an aside. Only a few days ago, I was in the UK trying to be a part of the economic and financial framework that exists between the two countries, which happens every year. We meet once in Delhi, once in London. Even at that time, one of the full-time members of SEBI, Varshney, was there. He's here before us today. From the moment I mentioned T+1 settlement, you could see in the face of all the British representatives, they were aware of it, but you could see in the face of each of the representatives a pleasure to hear such a kind of a technological advancement that you have implemented. Equally, a tone of disappointment that they have not reached that level yet. So it gave me immense satisfaction to sit in London to tell them that we are far better than them in terms of dealing with the stock markets. So that's a very recent memory that I've experienced, so I thought I should put it before you. I could see it in the highest of decision makers in UK, that T+1 is something which is like a pole star, which they are yet to reach. So congratulations on that as well. FY25 capitalization of India's stock markets crossed $5 trillion mark for the first time, making India the fifth largest capital market globally. Over the past 5 years, our indices have delivered an impressive 131% dollar-adjusted return, the highest among global peers. Marking it at when you're 150 is something of a great sweet pleasure. I think that goes immensely to the BSE's credit. Congratulations on that as well. India's weight in the MSCI Emerging Market Index has tripled from 6.3% in 2013 to 18.5% in 2025, reflecting strong global investors' interest and our rising influence in the global financial ecosystem. Today, with a combined market capitalization of over 400 lakh crore, the BSE stands among the world's top stock exchanges, empowering businesses, startups, and industries to scale and innovate. The logo, released for the celebration of the 150 years, today signifies prosperity, vibrance, growth, and new beginnings, besides emphasizing continued trust and enhanced responsibility. So, I think to commemorate the 150th year of this successful journey, it gave me immense pleasure to launch the BSE India 150 Index today, which will capture our growth story, our drive to innovate, and our structural innovation, evolution as well with growth. The silver coin that has been issued out today also honors the BSE's incredible journey. I also appreciate the BSE's CSR initiatives, which show that you still give back to the society that which has recognized your excellent performance. And those were also initiatives which underline your commitment to education, health, green energy, and community well-being. I appreciate your efforts on those scores as well. Today, I also want to speak a few words, not just of where we are, but of where we are headed to. India stands at a defining point in its economic journey. We have moved from the world's 10th largest economy in 2014 to becoming the 5th largest, and sooner we will be the 3rd largest with all our efforts. I look forward to that day because it would mark the high watermark where India can reach purely on the back of the efforts of our own institutions, and it is thereafter that the efforts will be much more required towards maintaining and moving upwards, which can become very, very challenging. To reach 3rd position itself is of immense pride, but to sustain ourselves there will require a lot more planning and taking ourselves forward. We recognize that the global landscape is changing and changing rapidly, and the world is going through a phase of trade calibrations, about which I don't need to talk in detail. The recalibration efforts on trade are very, very challenging. I wouldn't say it is worrisome, but it is also going to be very challenging. The intensification of tariff wars and the rise of protectionist policies have the potential to disrupt global supply chains, increase production costs, and create uncertainty in investment decisions across borders as well. This has had a ripple effect on the financial markets across the globe, and including our own market. Over the years, the number of companies with a stock market capitalization of over 1 lakh crore has increased steadily, rising from just one in 2000, that is a year, and to 30 just before the pandemic, and then rising sharply to 81 today. So I hope I don't need to reinforce the significance of this one achievement. The number of companies with a stock market capitalization of over 1 lakh crore was just one in the year 2000. It rose to reach the level of 30 before the pandemic, but then today it is at 81, and that is a very big thing for an emerging market country. There are at least 55 companies today with over 1 million investors each, from a little more than a handful of just 7 in 2014. So it is spreading. The retail investors' participation is also so significant in the last few years. This increase over the last 2 decades is a reflection of India's strong economic fundamentals, implementation of crucial reforms, and also a steadily growing investor base. India's financial markets have shown remarkable resilience despite recent global uncertainties. Testament to this is the fact that in the second half of March 2025, just a month ago, foreign portfolio investors made substantial investments in India's financial sector, channeling over 17,500 crores into financial stocks. And this is in rupees, 17,500 crore rupees. Simultaneously, domestic investors, particularly the institutional investors, have played an increasingly central role. In the last financial year, DIIs, the domestic institutional investors, recorded total inflows of 6.1 lakh crore, far outpacing the 1.3 lakh crore net outflows from FPIs. This transition of DIIs from a supportive to a dominant force underlines the growing maturity and depth of India's capital market. And I think this happening in the 150th year of BSE marks a major profile, impact-changing profile to the Indian stock markets. So the DIIs are no more just being supportive, but have now taken up the role of being a dominant force in our markets. Our equity markets have also seen unprecedented primary market activity. I'm sure most of you all here know most of what I'm saying, but I take this as an occasion to recall how the characteristics of India's stock market itself is changing and changing for the better, for inclusion, for financial inclusion, and for also the spread of well-being and prosperity through wealth creation, which is reaching everybody. Equity markets have also seen unprecedented primary market activity, which I said a minute ago. Over the past 5 years, the number of domestic IPOs surged threefold, from 106 to 320, culminating in a record equity issuance of 4.2 lakh crores in FY25, twice the amount raised in the previous year. Notably, India became the top country globally in IPO volume, surpassing the US with nearly double the number of listings. I think that deserves a hand. This reflects the growing preference for equity-based financing and the strong trust placed in India's economic prospects by both the domestic and international investors. We are all committed as government and also the markets and so on. We're all committed to the goal of financial empowerment of our citizens, regardless of geography or gender or income class, but providing the opportunity to participate in and benefit from the growth of our financial ecosystem. For this, we have carried out manifold reforms in the financial sector and innovatively used technology to achieve financial inclusion at scale and foster transparency, better and faster service delivery, and promote ease of participation in financial markets. This has certainly got reflected, and I would like to again say something which you in this audience may already know and recognize, but I take this opportunity to recall this. This is reflected in the strong retail investor participation in the capital markets. Our markets added a record of 4.1 crore demat accounts in February 25. I appreciate the Indian retail investor for having kept their trust in our markets, and that is why this number is increasing in this kind of a significant way, bringing the total number of demat accounts to 19.2 crores. I really appreciate how the retail investors have placed their faith in the markets today, and they are doing their own homework. And I'm sure the financial awareness campaigns are all paying off. But the better governing companies, or governance where the corporate governance are very good, companies where their performance is transparently laid out, and when MCS records are constantly being read by people, you know that the interest which the retail investors have taken to come in a big way into the market is very well informed and not a rush into the market thinking they're going to mint gold. So this is an informed move of the Indian retail investor from just depending on bank fixed deposits to taking a bit of risk and coming into the market, because the transparency element in corporate governance has given them a chance to learn better about companies and choose to invest in them directly or through the funds. Added each financial year now matches the total number of accounts that existed before the pandemic. The median age of Indian investors is 32 years, with over 40% of them under the age of 30 only. And one in four investors today is a woman. I'm so glad to give you this data. Youth and women are the ones who are placing their trust and faith in the stock markets, and it is that which we have to carefully nurture, and any small omission or commission will shatter this newfound faith, because this faith has given us strength. We need to nurture it. The mutual fund industry has played also a very pivotal role in fostering financial inclusion, with assets under management more than tripling in 5 years, from 22 lakh crore to 65 lakh crores. In just 5 years, the number of unique mutual fund investors has grown from 2 crore to 5.4 crores. And the majority of these assets are held in equity-oriented schemes by individual investors, reinforcing the grassroots strength of our financial system. To this end, we are also expanding investor education through SEBI, through AMFI, which is the Association of Mutual Funds in India, simplifying KYC, which is a constant work being done by the Finance Ministry, but in trickles, many measures are coming to simplify KYC and onboarding processes via Aadhaar-linked verification and strengthening grievance redressal mechanism. We are actually enabling retail participation in government securities and promoting stock exchanges, which are social stock exchanges, to channel capital towards the not-for-profit sector. So our vision for India's capital markets extends beyond scale. We are building markets that are inclusive, accessible, and resilient. As we look ahead, we envision Indian capital markets that are, I'd like to just bring to your attention 4 specific things which I'm looking at when I'm looking at the growth of the markets and Indian economy. So as we look ahead, we envision the Indian capital markets that are deep